The HKTDC Export Index monitors the performances of Hong Kong traders, but also looks at their performances going forward. And looking at the performances through the new figures is Edward Leung. He is the chief economist of the HKTDC. So Edward, looking at the figures for the first quarter of 2012, you're looking at 43, and that compares to 40.6 in the last quarter of 2011. So where do you see the world economy really going from here today?
As we can see from the index, it is really a small improvement compared with the last quarter of last year. And what happened, we have seen nowadays, is that the US is on a slow but steady recovery. However, there are still some sort of uncertainty there because of the low housing price as well as the high unemployment rate. On the other hand, Europe is still troubled by the Eurozone debt crisis. That is still some sort of pessimism prevailing.
So do you see anything like a rebound, bearing in mind that the Chinese economy looks as if it's going to undertake a soft landing?
Yes, we have seen that Chinese economy is on the way of soft landing. Though the Chinese economy may slower, but give more room for reforms. On the other hand, if the Eurozone debt crisis is contained, we can expect that the world economy will not get into the trouble of recession again.
So where do you see the encouraging signs in the major industrial sectors in Hong Kong?
According to our surveys, in most of the surveyed sectors, the index has improved, though they are still on a negative region, except that the clothing sector is really turning a little bit worse than a quarter before. Generally speaking, except the clothing sector, all sectors are improving, though really still not in an expansion area.
And which of those sectors would you say is the most promising?
The electronic industry, particularly the electronic industry, after the Christmas sales in the US, they found that the business there are not that bad.
Labour shortages and wage rises seem to be characterized on the Chinese mainland, but how is that reflected in the survey that you've undertaken?
The survey indicated that after the Chinese New Year this time, that the shortage of labour is still very severe. Over 50% of respondents telling us that they experienced shortage of labour problems, and almost 60% telling us that their problem of this year worse than last year. And at the same time, we have seen over 85% of our respondents suggesting that their wages costs have increased in the past quarter.
So we've talked about the developed economies, but what about the developing economies? What are the challenges that you see there?
For the developed economy or our traditional market, we have seen that most of the consumers are trading down. They are looking for what value for money products, and they go for private labels in order to maximize the value of their money. On the other hand, for the emerging market, we have seen that the rise of the middle income class, the reform in the retail sector, as well as the shift of growth model from export-led growth to more domestic demand and private consumption.
And do you see particular opportunities in those emerging markets?
For the emerging market, we have to tackle the new opportunities. For example, we have seen more and more buyers from emerging markets coming to this part of the world for sourcing. And also we have seen increasingly more retailers and importers in terms of numbers emerge in the emerging markets.
So what are the strategies that Hong Kong exporters should be undertaking? Should they be persevering in the markets that they know, or really trying harder in the markets that they really don't know?
Both they have to do. For example, for the handling the traditional market, they should, what we say, is aiming at trading down of their consumers or their buyers. What they can do is to reduce some function and become more practical. At the same time, in order to cater for the private label business, they got to have more design capability.
So if you're looking for the business, then presumably you must be prepared to take smaller orders.
Of course, they should look for more, smaller orders. For example, in the traditional market, the buyers, the importers, are cautious about inventory. They try to keep their inventory as low as possible. So for those markets, taking smaller order or quick delivery become a very important strategy to handle the traditional market. On the other hand, for the emerging market, because the market size of these markets are relatively smaller, then for the supplier for this smaller market, what they should do is to provide a greater variety and willingness to take smaller order